Okay, hello traders. Today is Thursday, April 7th. Good to be here with you this morning for the live intraday strategy webinar on SB Trade Desk. Hussein, Mark, Pete, Permendra, Eileen, Graham, great to see you guys this morning. So, quick update. We did just get the release of the initial jobs claims for the United States, coming out slightly better than expected here, 267,000, expecting a print about 270. Continuing claims coming out higher than expected, so not really a good read. Broader or overall picture is mixed. Heading deeper into the session, you do have some commentary coming out today. From Yellen, okay? She'll be speaking in New York. Very interesting combination of people, Greenspan, Bernanke, Volcker. That'll be at 17:30 Eastern time here today, guys. So just keep that in mind. Not expecting that she'll actually release anything material, but you know how these speeches can go. So that's pretty much going to wrap up the event risk. We do get some gas inventories and gas storage data later at 10:30. Nothing major that we want to necessarily stress. As far as the dollar performance heading into the U.S. session, you are looking at a dollar that's broadly strong against most of its major counterparts. You did see a firm rally in the yen last night against most of its major counterparts. You had Kuroda coming out with some commentary saying that there is room to ease if things materialize, but that they really want to step back or really don't want to stress necessarily trying to inflect or capital adjust to depreciate the currency. So I think the markets are kind of calling their bluff at this point. You saw some yen strength, pretty rapid across the majors there. So we'll take a look at that as well. Biggest loser on the session, Aussie Dollar. We've been following the Aussie crosses as well. We didn't quite get the rebound we were looking for. Aussie Dollar did. Came pretty close to that resistance barrier. I'd be looking to short. Aussie Yen didn't quite make it as high. Actually, the high that we talked about in yesterday's update was the high, and we kind of collapsed from there. So we'll go over that as well. All right, so as usual, any questions or trade setups you guys want to review, feel free to put them on the message board as we go through. First things first, I do want to cover the Aussie Yen from last night. Okay. So, took out a couple of support targets. Here's what we were looking at on the daily, first of all. And here's what the charts looked like last night. So, the daily chart, we had broken through the lower median line parallel here off the lows rather. The premise of this trade, and I think we talked about this briefly in the webinar, you made a really clean reversal off the 200-day moving average last week. The downside break of that lower median line parallel shifts the focus lower. Note that in momentum, it held 60 throughout the course of March, okay, and then saw a trigger break to the downside, giving us that confirmation back on the 5th that we were seeing a near-term reversal. Now, heading into yesterday's Asia session, I was looking for a rally higher to get back on the short side to target 82.12, 82.13 we noted, and the next subsequent target's down at 81.04. So you can see that we did just make a minor probe through that median line off the high before crashing right through. 82.13 has been taken out. The next downside target is confluence support here, the lower median line parallel, and the 618 key retracement that's just above the 81 handle, 81.04. Here's what it looks like on the 30-minute. And here's what we looked like last night. Okay, so that actually turned out to be the high. And in fact, you did get that trigger materializing that we were looking at right ahead of the release of that report. Finally gave out. You saw the downside break. Not only take out the opening range for the week here, but also take out that near-term support, that near-term sliding parallel, the 50 line for that broader operative formation. And we're now taking out that slope support that helped catch that low earlier in the week. Well, that'll be near-term resistance at this point. So depending on where we are in time, guys, you're looking for support somewhere in the range of this median line to the 618 retracement. Okay, they converge heading into essentially the close of the week. So I'm not sure we'll get it yet this week, but long story short, look for support ranging from 81.30 into the 81 handle now. Trying to get in from here on the short side, guys, is a fool's errand. I can't really, even from a scalping standpoint, I can't really get too excited or advocate trying to short this from here. You got to break to the downside. You're looking for that Thursday, Friday low. It could be a slow mutter higher. The only, opportunity I would see from here on this break is if we do rally back towards this region. Okay, the former 50 line, which we pivoted off of clearly early in the week, and that lower median line parallel for this formation, which held for a few days. That's basically into the open of US trade tomorrow. What do you think about divergence in the 5-minute chart for the Aussie Yen right now, says Graham. Let's take a look. Minho, great to see you. Promendra, I would say good morning to you. Eileen, good morning as well. Graham, let me take a look at the 5-minute chart for you. Here's 5. So this is slight divergence. You're absolutely right. Okay, barely marking some divergence here on the 1-minute chart. Yeah, I see the divergence you're looking at, Graham. My only problem is, Gary, we will, my man. He says, Huff, oh, Mike, when you can you take a look at the abomination? For sure, my man. No worries. Graham, as far as this is concerned, my only reservation here is that you're not really coming off of a major support barrier. If this was a median line that caught this low or a Fibonacci level, it'd be a little bit. He says, yeah, no, stop. Exactly. You know what I'm talking about. It'd be a little bit more of a conviction reversal. I could easily see the U.S. market opening and this thing just slamming right back into that median line, if not that 618, and then giving you the rebound. So not only do we want to look for these divergent signals, guys, near the lows, near the highs, but it's important that we only start to take this into consideration when price is approaching support or resistance. Because you're going to get divergence all throughout the rally, all throughout the decline, but it only makes it an operative type of signal when you're coming into resistance or support. So I'd like to see this travel a little bit lower before I start to look for some divergence. I see what you're looking at. You could possibly see a topside run back to 82 and then a slam to the downside again. But remember, you're looking for 31 pips. So it's pretty tight as is before you head back into that 82 handle. So a little disappointing. Again, I was really looking for a nice rally to get back on this short. We didn't get the opportunity to. If you were watching this last night, heading into, like I said, a couple of hours into Asia trade, it was actually a really, really nice trigger. You also had it on the 5-minute. If I'm not mistaken. Yes, right here. It was a 3-point trigger touch right there. And not only did it break, but a lot of times the best entry on these is after the trigger breaks, a test of it as resistance. You got 2 tests of it as resistance. And in fact, that would have gotten you a really tight stop, 20 pip stop or so, looking for that downside move. Any questions on Aussie Yen? From here, we got no option. We got to basically look for a little bit more of a settling down before we rebound. Ultimately, if we do rebound, we'd be looking to short. At this point, we're going to lower our bearish invalidation level near term. To basically this region here. Confluence of the upper median line parallel and the operative median line off the highs. And it's too early to do this, just as a caveat for everyone in the room, very, very clear. But if we do make a turn higher, so if that divergence materializes, Graham, and you see momentum trigger back above 30, you have to readjust that retracement to the new low. Okay? And if you do that properly, if that is the low, look where the 38.2 comes in, right at 83.50, right at that highlighted region. Okay? So again, we don't know that this is the retracement that's going to be operative at this point because there's no confirmation of this low. But we're looking for that heading into the U.S. Open today. In fact, let me just grade these out. Usually I just keep them gray until I have a little bit more conviction that it's a low, and then we'll go ahead and dim them out. Pretty big move, though. Pretty big move. Towards 81 would be a nice level of which to start to look for some support. Keep in mind not only the lower median line parallel, not only the key critical 618 retracement of the advance off the yearly low, but you also have this slope line for the operative slope we've been following since 2013, okay, which has caught some really nice high support support, resistance, support, resistance, resistance. Should offer some support, and that is just below the 81 handle. So some critical level of support coming in just lower from where we are right now. And again, might be an area of possible long entry. Ultimately, like I said, we would be looking for a rally to sell on Aussie Yen. Any questions? So the yen pairs in general, we want to be careful for, Gary. I know we play around and we joke about it all the time with the abomination and whatnot, but the yen crosses in general are a very, very interesting area. Keep in mind the fundamental picture is this. They've continued to say they don't want to interfere in the FX markets, right? We've known from history, if you've been trading FX for a while, they're known to come in with these massive injections and massive devaluations. Certainly it's happened over the last few years on around Halloween, if you guys remember. We got a couple of interventions at that point. So the market is essentially trying to call their bluff, and all this yen strength at some point, specifically, as I said yesterday, the BOJ really, their main concern is sharp and fast movements in the currency, not so much the magnitude. So as the yen continues to appreciate, and I think we've been seeing that drop start to accelerate, it's going to put more pressure on them to do something. So just be cautious. Make sure you don't over leverage yourself on these yen crosses in light of some of the BOJ's remarks. All right, so that's Aussie Yen. We'll continue to track that one. Again, looking for a little bit more of a dip lower, and then we'll look for some long exposure. At the end of the day, rally towards 83.50 or so, heading into 84. I would once again start to look for possible short entries. Okay, so that's Aussie Yen. Some of the other setups that we've been following, if we go back to the radar charts, these are the three pairs I've been trading most this entire week, specifically Cad Yen. I noted yesterday that I was in a position there. We booked about 38 pips before the thing turned around sharply. Unfortunately, we got stopped out at break even. It was a good stop because eventually we did break the lows and continue lower. The broader trade still remains weighted to the downside. It's just that I thought we were going to get a little bit more of a rebound. So we'll look at that in a moment. First things first, I do want to go in order here with the Aussie dollar. So on the Aussie, we were looking for a final rally to get short, and we just missed that topside target. So 76.38 into 76.43 was sort of a level we'd like to would have liked to see achieved to open up some short objectives. 76.77 weekly opening range high, 786 retracement. That was going to be our bearish invalidation. Okay, so that was going to be sort of the major level that we would want to see hold for a turnaround in Aussie, excuse me. So you got to spike higher. We just missed, and then this thing took out all the downside targets into 75.68. Here's what Aussie dollar looks like now. Okay, so right off the bat, some things that were standing out at me. Again, obviously this reversal here was about 3 a.m. New York time, so I didn't get to catch any moves on the Aussie yesterday. This was the area of interest. We just missed it. The high was 76.38, 36. The actual level starts at 76.38. But look what was going on in momentum, guys, on every subsequent high. Higher high, higher high, lower high, lower high. Then you got a 3-point trigger break. So unfortunately, if you were watching this, the break happened pretty quick, and you would have been difficult to get a stop against that high. On the near-term charts, though, it was a lot clearer. So here's what the near-term charts look like heading into that high last night. Okay, and a couple things to take note of is this. Even on the 5-minute, you were getting ongoing divergence into that high, something you want to pay attention to. Okay, another thing is this. The 5-minute on that last 2 peaks, followed by a real quick trigger. These are the ones that you want to pay attention to when you're heading into these resistance levels, when you're heading into the highs of the session, especially when we're looking for a broader downtrend. And I even said, I'm hesitant to take any other long positions from here. We're looking for a turnaround. So you had that level that gave out. That would have been the best stop. Would have been at precisely 15 pips or so. You got another trigger break here, a little bit more convincing, but your stop would have had to been a little bit a little bit more open on that one. Remember, we're only looking for about 25 pips on this particular pair. So the signals were there. You came into a nice level. Really, the break back below this region, former channel resistance, is what validated the reversal. Again, targets at 75.32 already taken out. Next downside target, you're looking at the weekly low, basic 236, that's 75.10. And major support is 74.82. This is a longer dated 50% retracement, and it coincides dead on with a 1618 extension right off the highs. Again, that confluence is heading into the close. I want to say heading to the open of Asia tonight, down here with that median line, or the bisector of the channel. I want to draw a parallel to the discussion that Jamie's been having with you guys on the fact that gold and Aussie, the correlation, the 19-day correlation delay, is still in effect. Okay, and if we take a quick segue and see what gold is doing today, you can see a nice rally materializing off the lows. So from where we are in Aussie dollar 19 days back, you'd expect to see some further downside before a rebound to give us a larger recovery ahead of the last leg lower, or the next leg lower, let's call it. So with that in mind, don't get too aggressive on the short side for Aussie dollar just yet. Here's what the daily chart looks like. I do want to note that we're making an outside day reversal. It's going to be important to see what the close looks like here today. But if it is an outside day reversal, really puts the stress still in that 75.10 level. Remember, 74.80 or so just below it. That key confluence on the near-term chart also coincides on that median line. And that's the break you need to get the validation for a move lower. For the exit on Aussie dollar in European trade, the RSI wouldn't break 30. Where would you have pulled it off on the 5-minute? Let me get that back. Where would I have taken profit, Eileen? Is that what you're asking? Okay, so right off the bat, I really need to stress and drill into you guys the importance of discipline. So you're looking for about 25 pips right off the bat. As soon as you achieve 25 pips or thereabouts, you need to peel off some of the position. It's just the way we got to do it, guys. And actually, I'll show you the Cad Yen trade I took last night. It's a perfect example of that. You know, I had no way of knowing that it was going to reverse, but it's a good thing we pulled half of that trade off because it reversed right against us. So right off the bat, 25 pips or so, you take some off the table, you bring your stops to break even or better, and then you look for the next downside targets. Here's what Aussie dollar looks like on the 30-minute, Eileen. This is the way you would have wanted to play it. Whoops. So on the entry there, right, your first major area of support was right here at this 38.2 retracement. Why? Well, you had a basic 38.2 of the advance, but more importantly, you had that line that we were looking at for the April low day close. That's a level that we've been stressing for almost a year now. Literally, we're in April again. So that April low day close, which was such a huge pivot at 75.90, once we broke back below that, I would have been a little bit more inclined to hold the position open. So the initial quarter, third, you know, I can't tell you guys how to manage your risk tolerance. That's really based on your personality. If you're someone who wants to take a little bit more meat off the bones, if you're someone who wants to play a little bit closer to chest, for me, capital preservation is paramount in every position that you take. Okay. Sometimes I focus more so on what's the downside, even more so what the profit target might be. That's just my personality. Of course, I'm trading with typically a larger amount of leverage, so I need to be a little bit more prudent. But on a trade like this, 25 pips, I'm taking off a quarter of it, or a half, or a third. Once we break 75.90, I'd be much more inclined to bring my stops in to break even or better and just let it run to the next target, which was 75.32. This is hypothetical, guys. Unfortunately, I wasn't awake at 3 in the morning to catch this one, but that's how I would have played it, Eileen. Now, if you're asking from a momentum standpoint, where do I change my opinion, or when do I start to shift away from the position? Well, definitely the fact that you're seeing 30 hold as support, but not so much. The thing that would have really changed my opinion, Eileen, would have been divergence into a trigger break. So the divergence signal is actually happening now on this low and this low. Remember, it's not necessary that you see the oscillator make a higher low. Even if the oscillator is holding equal lows, but price is making a new low. That's still divergence. All you're looking for in RSI is that the signature is not confirming a new extreme in price. So a new low or a new high in price. And that's exactly what's happening here. So for this, if I was holding a short position still right now, I'd be looking at something like this. And to be honest with you, Eileen, that would have taken me out of the position. Same thing here. That's even more so, right? Lower low, lower low, higher lows, trigger break. This is when momentum starts to affect what I want to do in the near term in the trade. Okay? But discipline is discipline. If we're looking for 25 pips, as soon as we hit a quarter of that ATR, we're doing something. I don't care if you're taking off 1/10, but you're putting something in your pocket. And you're bringing your stops up. It might not always be a break-even stop at that point because you might not simply have a higher low to trade against, but certainly bringing your stop in to mitigate any possibility of that trade going against you. Great discussion today, guys. I think this is good to hear every now and then, especially in these kinds of markets. Does that help, Eileen? Does that make sense? Okay, I see the hypothetical, and to remember to take some off and to watch for divergence even to the exit. Right. He says, okay, good. Discipline's key. Absolutely. And don't forget, guys, we're not just going, it's not a pure momentum strategy either. We're still minding the levels. The major thing that we want to make sure that we're watching are the key levels and thresholds. So even though, again, this probe below the low for U.S. trade earlier in the week, I would have taken a limit there. Absolutely. If I didn't, as soon as I see the near-term chart start to shift in momentum, divergence, momentum break, divergence, momentum break, for me, again, that would be another signal of, okay, you're at one of our support targets, you're getting divergence, look for that rebound to gather pace. Again, at this point, guys, I'm still looking for possible short exposure from here. The failure here kind of keeps the focus lower, but it's going to be a hard trade for me to really justify. Even if we get into this channel resistance, which is sort of where I'd start to look for some short triggers, there's really nowhere to put a stop of any type of conviction. So we're going to have to monitor this one for a while. I'm not sure we'll get another play on this to the downside just yet. And again, following the 19-day delay that we're seeing with gold does suggest, again, that you still see a move lower here in Aussie before ultimately giving us a nice little rebound. Questions on Aussie Dollar before we move off? So that's Aussie Dollar and Aussie Yen. Okay. I just want to talk about dollar CAD real quick, and then we'll talk about Cad Yen. That's the position I was in last night as well. I want to touch base on Kiwi. That really tight channel we were looking at yesterday did break to the upside, so that's something that I was looking at yesterday. Now, I guess that we're talking about CAD, we'll take a quick peek at crude too. And then for sure, Gary will take a look at the abomination. All right, first things first, dollar CAD. Here's what the daily chart looks like. Here's what we look like yesterday. Now, on this trade, just to recap real quick, the major premise was the rebound higher and the fact that we may have put in a pretty decent low here near term for dollar CAD. The bearish invalidation level hasn't changed all week. That still remains the bullish invalidation level. It's Thursday, guys. Sorry about that. Hasn't changed all week. Okay, that's still 29.65 into 29. What is that? 29.76, right? This region right here. 618 off the low, 100 off the high, my favorite setups, right? In fact, the spike low that we made there on last month was the exact low day close for October. The rebound taking us back above this. The fact is we never closed below this key region of support. Divergence into the lows. Didn't get much of a trigger break, but again, he had some radical price action earlier in the year. So what do we look for from here? We're looking for a pullback to get back on the long side. Was this it that we got last night? Here's the dollar CAD in the 30-minute. Okay, and sort of the exact position that we were looking at played out. remember earlier in the week we noted that 3080 level as our near-term bullish invalidation level. And I said here, even though we're below 130.80, cutting out of short exposure for now, looking for a possible move lower to offer long entries with a breach above this near-term descending ML needed to shift the focus higher again. Bullish invalidation still remains 29.67 to 81. So you did get the break below 30.80, tested that near-term target 30.36 with a perfect rebound off that 30.20 level. Now, the thing with the dollar CAD is that you didn't get any type of near-term targets or near-term triggers except on the 5-minute. And even the 1-minute did give you a nice trigger down here. That was the only one you got all night. Once that gave out, this thing just continued to push higher. So I'm looking higher near term while above 30.80 again. So I'm going to keep that same level as near term when I'm looking higher against. To get bearish, I would need to get back below essentially the low that we made last night, but basically back below that 30.36 level and the median line here. We need to break back below here to confirm a move back towards that key support barrier. Broadly speaking, the formation we're looking at, we're simply looking for a low to buy. Okay, ideal scenario, if you put a gun to my head and say, what would you want to see? I would say I would love to see this drop right into this little pocket here, heading into the close of the week or so, heading into tonight, and then see a move higher. Long story short, now that we've defended the opening range low for the week, you do need to stay constructive above 30.36. Also keep in mind, let me just zoom this out real quick. Just wanted to keep in mind that median line formation just off last week's late high on Friday and this week's high highlights this region as major resistance. So the other flip side of that, if we do see a breakout above 31.66, that would be the validation for the continuation or the resumption of the broader uptrend. That 31.66, by the way, is a nice pivot in price. It's just simply the low that you made here on the 11th, but you also saw some nice breakthroughs, some nice pivots, and right now coincides dead on with not only the upper median line parallel for just this short-term move, but also the broader channel resistance we were looking at from the highs we made on the 25th of January. And remember, that's been a nice channel as well, catching the lows, catching the highs. Any questions on dollar CAD? Again, looking for a pullback to get back on the long side, need a breach of 31.66 to validate the resumption higher. It was a pretty textbook move last night, though, guys, specifically on what we were expecting, looking for a low to buy, kind of jackknifed right in. I mean, that's just pips away from the weekly opening range low. And 30.20, by the way, guys, I'm just verifying here before I want to say it to you. 30.20, aside from it being that really nice pivot, it's also the weekly open. Exactly. Now, just looking at it here, again, there's your open, 130.20. So pretty clear. Nice test of the weekly open and a hold. Still looking higher. Questions on dollar CAD? All right. Next up on tap. Let me just see real quick what dollar CAD is doing on the near term. Okay. Nothing stands out real tight right now. I'm reluctant to buy so close to the session high here. So I would love to see a pullback into this region to the U.S. Open with a downside trigger here or a trigger into support here to try to get the long. But we'll have to see. It doesn't look like there's anything pending right now. Although you are getting some divergence here into the lows. All right, let's move on. That's dollar CAD. Next up on tap is Cad Yen. Before we move off, real quick, I do want to take a quick segue and look at the oil markets. Obviously, very highly correlated. We're seeing that correlation start to pick up a little bit over the next few days. Here's what crude looks like. Guys, the chart has been so textbook. If you took a snapshot of this earlier in the month, you didn't have to change a damn thing. Everything's been exactly the same. So major key critical support that we highlighted earlier in the week did hold. That support extended into the 100-day moving average at 35.31. The 38.2 came in at 35.82. We settled right into that region, closed the session there, rebounded higher. The rebound finding resistance exactly where you'd expect. Confluence region of the basic trendline support, basic trendline resistance off the highs, the 236 from the ascent off the yearly low, and the 618 extension of that first leg down. Okay, so really clean. From here, you're at resistance, right? So expect some weakness in crude. That could give us some further weakness in CAD, which would give us dollar CAD moving higher as we want. But broadly speaking, the levels have not changed. Near term, your bullish invalidation level is still 35.82 into that 35.30 region. Also note, that you have some very clean inflection lines here. Okay, so this is basically an inflection line catching the low from December, the high from January, the high from February, the pivot break. Okay, and here we are yet again. That same slope taken to the November lows caught the exact highs last month. So the levels are pretty clear. This is the major key support that you need to get below to validate the break lower. Resistance 37.91 into 38.13. Okay, so keep this in view. I know for those of you trading stateside, you can't trade this. For our international clients, obviously, the levels have been very clear. Necessarily don't have a scalp chart for you, but on a near-term position like this, again, the levels are exceptionally clear. All right. Any questions on crude? All right, now we can move into Cad Yen, and then we'll jump into the dollar yen here for Gary. So Cad Yen looks like this. First things first on the daily chart. Okay, and here's what we looked like last night. Okay, so again here, I'm sure everyone, if you've been with us throughout the course of the week, last week we highlighted this major key inflection, the reversal right off of a key confluence support, 50% retracement off the low, 100 off, or 50 off the high, 100 off the low. You had basic channel or trendline resistance off June. Long story short, momentum signature, beautiful hold sub 60. You got the nice turnaround here. The break here, major support that we were looking at earlier in the week, validated the continuation lower. Yesterday, we were trading right into this region, and I was on the long side looking to play a rebound off of this critical support. Daily ATR is 114 pips. That gives about an expectations of 28, 27 pips per scalp. Here's what Cad Yen looks like on the 30-minute. Okay. And here's where we got long yesterday. So I don't know if you guys remember, but during the FOMC announcement, an interesting release, by the way. We didn't get anything really new, just stress that some members saw, a risk of normalizing too quickly. Some members saw, that it was pertinent to move higher on rates in the near term. They're playing both sides. Nothing new here, guys. But especially when something like that happens and you see a pretty diabolical move in price, that's the ones you want to play. So in fact, most of this was kind of just a luck move, but this thing spiked right into the lows. That's the lows for the week. Momentum on the 30-minute failed to even touch this 3-point trigger. And then you got a really clear a divergence signal on the 5-minute as soon as this thing recovered. So we took a long right here against the low. It was literally like a 12 pip stop, 13 pip stop. We're looking for about 28, 29 pips, right? Well, last night on Kuroda's comments, you saw a big spike, and where did that spike take us into? The exact median line. And that is just a basic parallel for the formation we were following off the highs. We spiked right into it, and then we collapsed lower. Here's how the, I guess I could just show you, here's how the trade actually panned out. What is this? Cad Yen. I'm not sure if it was this account, actually. Yes, it was. Okay, so there was the entry. Again, this is a trade, guys, where you got to keep in mind that you're testing not only the range lows for US, but it was also the opening range low for Europe. Again, this is a nice indicator you can get, guys, for those of you who are newer, called trade sessions. It allows you to just highlight the opening and closing, or the sessions for each market around the globe. So green is London, red is New York, dark blue is Tokyo, light blue is Sydney, and so forth. So you can see that on that spike post FOMC, we came right into the London low, and it failed. Okay, and you saw a quick rebound here in momentum, followed by a trigger break. Okay, and you can see you're never going to catch the low. Okay, in fact, the actual point of which we took the position, just to be clear, whoops. Okay, the actual point of where we took the position right here was after you've already seen that break, right? The market broke back above 50. You just take it right off the bat on the break of the 5-minute above, and now you're looking for 28 pips. Well, later in the session, Kuroda came out, and those comments spiked it right into that channel or median line resistance. Okay, and this is, again, we have to stay disciplined. So on that trade, as soon as we got 28 pips, it was happening on the way up here. Those comments really caused an acceleration. Why did I get out? And again, sometimes that's luck, guys. You're not always going to get a top tick like that. But long story short, why did I get out? What's your first area of resistance? Period. End of discussion. I had no idea, guys. This could have launched into 85. Am I going to sit there and kick myself because I got out of the trade? No. We're near-term trading. We need to stay disciplined. Our initial target is 38 pips or 28 pips. We got an extra 10. Great. Stops at break even. Boom. You got stopped out right at break even on the pullback. Okay, so now the market's moving lower, and we've just tagged or just came just shy of the next downside target, which is right here at 82.38. It's the key 618 retracement. And as we noted on the daily chart, a big, big level. So you could get some snapback here. Long story short, you're still looking lower, sub 83.35, that same median line here for the operative slope, with a break lower targeting 81.19, nice 764 retracement, and that converges on the median line over the next 2 days. So pretty clean here on Cad Yen, although we didn't get the reversal and the rally higher that we were looking for. Again, inevitably that rally higher, guys, we were looking to sell it. The whole point of getting this rebound here is to see a better position and get back on the short side. Remember the reversal we made. Remember the structure we broke, right? We're even breaking downslope support. So that's just further acceleration of the downside. So we didn't get the rebound at the end of the day. That's why we played defensive. And from here, we'll look for a rebound to get back on the short side. Looking to target, again, that confluence support lower down. Minho says, in your trade, would just stretch some fib levels justify re-entry? It looks like it had more legs down. Not sure what you mean by that. Minho, give me some more information on that. What do you mean by stretch the fib levels? Yeah, I'm with you. You saying the trade that you just showed right here? from the entry. You talking about this range right here, Minho? Okay, I think I know what you're talking about. You're talking about from where I entered to where I exited. So you're talking about something like this, right? Would I look at something like this, right? Yes. And point in fact, actually, to be quite frank with you, I did have this exact retracement on yesterday. We took out half the trade at 38. Again, I put my stop at just below the 618, which is kind of like where I would expect the last ditch effort to hold. So it spiked lower. This rebound here faked me out. I was screaming because I thought, again, I had just gotten stopped out for no reason, but we subsequently broke below. You got to take into account a couple of different things too, guys. On the exit, look what happened in momentum. 3-point divergence in momentum as price made a higher high on a closed basis for the candles. So right off the bat, you're seeing momentum wane. Then on the turnaround, not to mention that it held 60 as resistance. Then on the turnaround, yeah, I'm not going to take a loss on it. So I put my stop at break even, which just happened to be right below the 618, and that's what happened. So I'm a big fan, Minho, of doing that. Tacking on retracements midday, mid-ranges to see where the pullback could find some support, to see where the pullback might offer another opportunity to engage in that trend. But, once you break the lows, that becomes null and void. So from there, you kind of have to look for a new low before you start to tack on any new retracements. Does that make sense? He says, okay, thanks. Right on. And again, now that you brought that up, Minho, remember, this retracement that's on the chart, guys, from last night, okay? Once we've made some sort of confluence or some sort of divergence or a low or a spike low, you need to tack this on to the new low. Okay, that's why we gray them out until we have a little bit more of a concrete conviction low in play. So for now, we'll just leave that there. One other thing I want to just note, I mean, you guys are bringing up some great topics here today. One other thing I just want to note is on these trades, guys, remember, how do I say this in a way that makes sense? When the markets are going to make a high or a low, typically they're not rounded, real clean lows. The way you want to be thinking, especially in intraday trading, is what's the move that's going to, pardon my French, that's going to screw the most amount of people? Okay, that's typically what the market will do before it makes the move, right? When you see a trade like this where it's bottoming out, there's so much time for people to be piling into the longs. It's too simple of a trade. And that's where I start to get a little concerned. That spike low, great. We booked 38 pips. That's where our strength is, right? But on a low that the market is going to respect or high, typically you're not going to see a rounded bottom like this just launch through. And my point in saying that is on the spike that got us out, these are the kind of highs that the market will tend to make. They're going to be emotional. They're going to be a real sharp run into the high and then a pull right back. They're not going to be these rounded, sort of like meandering highs. Same thing on the lows, okay, for long exposure. You can see that each of these lows were pretty emotional. Look at the 5-minute candle. This one 5-minute candle that constituted the low went from 83.40 all the way into 83.80, 40 pip 5-minute candle. Same thing here on this low. Look at the range of it. Same thing here on this high, right? You didn't just see it make a rounded high and turn around. Nope. Again, I'm kind of zooming this in pretty much to show it to you, but again, huge range, 83.87 all the way up into 84.04. And then a quick jackknife to the downside. So keep these things in mind when you're looking at the market reacting to a support or resistance. You won't really get sort of a rounded low like this and so much time for people to pile in the long. No. In fact, that's what the market did here. Gave so much time for the long guys to try to get in. What's the move that's going to screw the most amount of people? Fake higher. The guys who weren't long try to get long, right? Meanwhile, the broader trend is still to the downside. As they get stopped out, that selling position or those sell orders start to cascade, and then you get the next leg lower. So it's just some kind of thought process there. I hope that helps, guys. And that's Cad Yen. Let's take a quick look at the abomination for was that Gary? Hey Gary, here's what it looks like on the daily chart. I haven't really been too crazy about trading dollar yen per se. Look, for me, this is a massive, massive break, and I can't advocate scalping the short side. I can't advocate trying to call a low. So what do? For the abomination, I sit on my hands. Okay, trust me, dollar yen has taken enough money from me over my career that I don't try to press any type of turns here. So Minho says, need some serious screen time to understand those price behaviors, etc. Rounded lows. Yeah, Minho, it comes with a lot of experience, and again, man, it's going to be inherent just from watching price action, guys. You're gonna start to notice these little nuances on how the market reacts near major highs and lows, and it goes back to the sentiment, guys, and the psychology of trading. If you guys haven't seen or haven't read Jamie's book, Sentiment in FX Markets, definitely encourage you to go through that. You know, he really talks at length on how not only do we look at sentiment, but different news media outlets and headlines and how that matches with what we see going on in price. So I definitely recommend you guys to get a hold of that. As far as dollar yen is concerned, Gary, let's take a quick fresh look. Again, I haven't been following this, so just bear with me. Okay. Okay, so I just want to show you guys how many things were invalidated on this move that we're seeing here this week. First thing I'll bring your attention to is this basic trendline support. This is connecting the lows from April of 2013, the June low of 2013. You almost tagged it here mid-year in 2014, but you rebounded off of it last month. Okay, and that was confluence support with a 2618 off the high, right? What else was there on the move that we just invalidated? So we broke that long multi-year trend line. Well, you also had the decline, or the trend line that we've been following, or the median line formation off of the highs has held very, very nicely. We did see a breach of the highs, but we pivoted off it. We did see some really nice pivots along the median line, and we've now compromised the lower median line parallel after a clean rebound off of the median line. Even more so is this formation. And this is the one that I've been stressing most. Why? Because it's caught the most turns in price. So if you take the high and low for December, and then just the subsequent high from June, I know it's a very, very messy median line formation, but look what it's caught, guys. June high, August high, November high, December high. The median line? Well, broadly speaking, it's been messy, but on a closed basis, there's the June rebound, September rebound, October rebound, January rebound, right? Here's the lower median line parallel. That also converged right there. Okay, so you broke a lot here in dollar yen, which is why for me right now, Gary, I got no play for you, man. I got no play for you. If anything, I'd say look for 106.60 and change. My first initial target would be right here along this. This is just a sliding parallel for the same operative slope. So if we're going to find some sort of near-term rebound or recovery, that would be my first area of interest. That comes in somewhere in the range of 107.40, 107.45. So that might be a little bit of a near-term rebound, but man, essentially we've got to get back above 110 for this to be any type of recovery play. Now, keep in mind what I said earlier in the session really stands true more so on dollar yen, guys. Okay, as the yen appreciates, this is going to put pressure on the BOJ. Any way you slice it, any way you slice it. Specifically on such an export-driven economy, a stronger yen is only going to make it's only going to hamper growth for the export market. So certainly for the yen strength, it's a bet against the BOJ, not typically a bet I'm very interested in. Now, you guys know we're not too big on fundamentals because at the end of the day, a real trader, especially a swing trader or near-term trader, as long as you're not trading on months time frames, these types of things aren't going to really change our opinion. But I'm just saying that as a caveat because you never know, specifically heading into the weekend. BOJ comes out on Sunday and says that they intervened or some random thing happens, you can find yourself underwater a couple of hundred pips pretty quick. Okay, so on the yen crosses, specifically dollar yen, just be a little bit more nimble. That's all I can say to you um, right now. Is it the same concept on sterling yen, Hussein? I wouldn't necessarily extrapolate that to sterling yen. While sterling yen is breaking lower, I'm not quite as bearish sterling yen. Let me say that. Um, well, let me take a segue first. Hussein will come back to this. I just want to look at sterling dollar first. So this is also a trade we've been following. You can find the intraday charts on the intraday page. I think the last update was right here a couple of days ago. This is back on the 5th. So we were looking for that key support near what is that, 140.90. We broke below that and came right into the 140 handle. Talked about this yesterday. Turned right ahead of it. But guys, where did we close? Above the median line formation. Okay, so I'm still kind of focused on this support, and I don't want to get too bearish the pound until we close below that. I know we spike lower. Remember, the closes are really what's most paramount, specifically on these formations. So for me, I'm not really too interested in getting on the short side of pound. Here's what the intraday chart looks like, and here's what we looked like a couple of days ago. There's that 140.90 level. Let me snap this. The levels aren't. There we go. Right? You got a quick snapback, run right into that support, turn just ahead of it, literally like 2 pips ahead of it, and here we are back above, and we're kind of just straddling this 140.90 level. So I don't want to do anything with this here. I do think that inevitably you do see a turn higher in the pound. So as far as pound dollar is concerned, that's what I'd be looking at. As far as pound yen, that yen strength is likely to draw it down deeper before you start to find some strength here. Okay. Here's what the pound yen 30-minute looks like. Okay. These slope lines that you see right here are the same as these slope lines that you see right here. Okay, just to put things in perspective. And we're trading at that slope line right now. But my point in showing you this is that we've made it through all the targets that we talked about earlier in the week. Okay, there's the extension off the high. The last target was 53.50, 53.48. Outside of median line formations now, there's really no targets to take into account because you're at lows we haven't seen since 2013. You got some soft targets here, but really your 618 at 147. I mean, that's 500 pips. So guys, when there's a lack of clarity, especially on the near term, there's no previous price action to go over. This is sort of a longer term position in my mind at this point. I'm not really looking to scalp it unless we get some more conviction, stronger divergence, a reversal, outside reversal off the low, something to shift my focus back higher for me to try to sell this at this point. There's just no stop. There's just no stop. And this is going to hurt too, guys. So 50 pip ATR for a quarter of the day means that you're likely, if you're just chasing this, it's going to be pretty sour to get a 50 pip hit on that. And you have no stops of conviction to put it against. I mean, even if you take the next major session swing high here for Asia, that's 155. Way, way too much. So Hussein, does that help, man? I wish I had a little bit more conviction on you. Is there something specific you're looking to do with this? Because I would not be looking to fade this yet, if that's what you're thinking. Bear with me. Let's just play around with these for a little bit here. So I'm going to go ahead and get rid of this median line formation. We've already cleared that on all accounts. This was a nice break. That was the onset of the decline. We don't need this anymore either. I do want to see again what this looks like. Okay, let's take a parallel off that line. Not bad. Not bad. Okay, so a median line formation just off the highs here for the March trade calendar month. And you take a sliding parallel from the low that you made for basically, what was that, the 8th? You can see that that slope catches that low pretty nicely at this point. Okay, and this is how you want to work these slopes, guys. You want to see as many pivots as possible. So here's resistance, breakthrough, instant support. On the way down, support, breakthrough, instant resistance, right? This is all giving us validation that we're working with the proper slope. Okay, I don't need that one. Okay. All right, so we'll work with this for now. But what does this highlight, Mike? What's the whole point of this drill? Well, basically, guys, this is going to be the region that you need to clear to get back on the constructive side. So aside from some divergence, and specifically an outside reversal day or something of the like, that's kind of the reversal level that you need to see give out to get this thing going. By the way, this retracement, as of now, null and void. Don't need that anymore. Okay, we've taken out that low. This retracement, also null and void. And once we've had some conviction that we've made a low, tack on a quick retracement right off the high, and those will be your near-term levels to the upside. So I'm going to put it on now just to show you guys, but again, we cannot respect this retracement until we get a little bit more conviction of the reversal. This is just a soft pivot. We can get rid of that. And a nice pivot range right here at highlight. So that's sort of the setup that I'd be looking at on a pound yen type trade here, Hussein. If, big caveat, this materializes to be the low. Again, if you put a gun to my head right now, I would say no, you got a little bit more lower to go before you find any major support. But once you make that stretch low and you find a little bit more conviction on a turn in momentum, just readjust this retracement to that new low, and you got your top side objectives. As far as trying to scalp the south side of the trade, I can't really be a big advocate of that from this point. All right, does that help? Hussein says, okay, thanks. Eileen says, love the from scratch work. Sterling Yen, always great to see the planning in action. You're more than welcome, Eileen. Always willing to help out. But that's the pound yen setup as far as I'd be looking at. Last thing I just wanted to just touch upon, we're over on time here, guys, but Kiwi Dollar, remember we were talking about that real tight, ridiculous ML off the highs? It broke yesterday, okay? So we were holding this for literally 5 days. We highlighted this into the close of the webinar yesterday. The U.S. session opening range came in right into that resistance, inevitably broke, okay? Deep in the session, right around noon. We tested the opening range high again and pushed into a new high in overnight trade. Basic trend line resistance. Now I'm a little more cautious, and this is what I want to say. If this is a breakout test of support, we shouldn't fail below this. We should not fail below this. If we break back below that median line, forget the long side of the trade. You're probably going to see this thing travel down back towards that 38.2, 67.28 before you make any moves. The long story of it is, you simply set a Monday, Tuesday opening range, and you're still in it. Top side break above 68.66 is what's needed to validate a push higher. Okay, and by the way, 68.66, just for your information, is the high day close for December. Also, posting an outside day reversal here as we head into the US Open. So watch the close of today's session. If we close sub that low for the week, if we push below that trend line, former median line resistance, like I said, look for that push down lower towards 67. What is that? 28, 67.29. Any questions on Kiwi Dollar? Might be something to take in consideration there too. All right. So, guys, that wraps it up for this week on the webinar schedule. We'll be back on board next week. Remember, Monday webinars are public webinars on daily FX. Obviously, the screen quality isn't as high, guys, and we don't have as much time to go through all the setups, but we got to give the outside folks just a taste of what we do here every day. We'll be back on board here on SB Tuesday, Wednesday, and Thursday, 8:30 Eastern. Till then, guys, if there's anything new, I'll give an update tonight. I don't really know, guys. It depends on what the market's doing, but I really don't want to spread our focus beyond Aussie dollar, dollar CAD, CAD Yen, and sterling yen. Those are sort of the majors I've been focused on, or excuse me, dollar CAD as well. Aussie dollar, dollar CAD, and CAD Yen. Those are really the ones I've been focused on most aggressively this week. So if there are any updates, we'll make it later tonight. Other than that, guys, have a great weekend, and we will see you all next week. Eileen, thanks for the comments. I really appreciate it. Minho, Graham, have a great weekend, guys. Cheers.